Could AKE be one of those cryptocurrencies that has already fallen enough to look seriously undervalued, or is the market giving investors a warning that this token could remain under pressure for much longer? AKEDO is sitting around the number 219 area, which puts it in a part of the crypto market where investors can still find substantial upside if adoption accelerates, but where volatility and uncertainty are also much higher than with established large cap assets. So the big question is this: are we looking at a hidden opportunity before the market catches up, or a falling token that retail traders could mistake for a bargain? AKEDO, represented by the ticker AKE, is a blockchain gaming project built around the idea of combining gaming, digital ownership, and blockchain technology. The project is associated with the AKEDO universe, where players can interact with digital assets and gaming experiences, while the ecosystem uses blockchain infrastructure to support ownership and transactions. That puts AKE inside one of crypto's most speculative sectors, blockchain gaming. And this sector has a very interesting history. During major bull markets, gaming tokens can explode because investors begin pricing in the possibility that millions of players could eventually enter blockchain powered games. But when the hype disappears, gaming tokens can fall dramatically. That's why AKEDO is interesting right now. It isn't simply a cryptocurrency competing on transaction speed or DeFi. It is betting that blockchain gaming can become a meaningful consumer market. If you're enjoying this kind of deep crypto analysis, make sure you like the video, subscribe to the channel, and compulsory leave a comment below. I want to know what you think. Is AKE an undervalued gaming token with a chance to recover, or is the market already telling us that the hype around blockchain gaming has faded? Now let's talk about the price structure. AKE is a relatively small cap cryptocurrency, and that immediately means we need to approach technical analysis differently from Bitcoin or Ethereum. With smaller assets, liquidity can change rapidly. A small increase in buying pressure can create a large price move, but the same thing happens when sellers appear. That means a falling trend can accelerate quickly if support levels fail. The first thing to watch is whether AKE can establish a series of higher lows. If buyers defend the same area repeatedly and eventually push through a previous swing high, that would suggest accumulation may be taking place. But if every rally creates another lower high, sellers remain in control. That is the critical technical debate. A falling trend does not end simply because the price has already dropped heavily. It ends when buyers demonstrate that they can consistently absorb selling pressure. For AKE, that means watching volume as closely as price. A breakout without volume can easily become a bull trap. A sudden spike followed by a sharp rejection can show that short-term traders are taking profits rather than long-term investors accumulating. And when a gaming token is involved, momentum can become even more emotional because the price is often influenced by announcements, new releases, community activity, partnerships, and broader gaming narratives. So technical signals alone are not enough. Now let's talk about ratings and signals. AKE does not have a conventional Wall Street analyst consensus. There isn't a large institutional research community assigning standardized buy, hold, or sell ratings to the token. For a crypto asset like AKE, we have to judge the signals through market structure, liquidity, ecosystem development, user activity, token utility, and overall sentiment. And the signals are mixed. The negative signal is the volatility. If a token remains far below previous highs and repeatedly fails to reclaim resistance, that is a sign the market is not yet convinced that the long-term recovery has begun. The second negative signal is competition. Blockchain gaming is an extremely crowded sector. AKE isn't only competing with other small gaming tokens, it is competing for users against traditional games, mobile games, PC games, console games, and major Web3 gaming ecosystems with substantially larger budgets. That is a huge challenge. But there is a bullish signal. Blockchain gaming has one fundamental advantage that traditional games don't have in the same way. Digital ownership can be built directly into the ecosystem. If AKEDO can create a genuinely enjoyable gaming experience while using blockchain technology in a way that benefits players instead of making the game feel like a financial product, it could have a meaningful competitive advantage. And that brings us to the biggest debate. Is AKE undervalued? The bullish argument says the market may be pricing AKEDO based on current usage rather than future potential. Gaming is enormous. Even a small share of the global gaming audience represents millions of potential users. If AKEDO successfully develops games that people actually want to play, grows its community, expands its digital ecosystem, and creates real demand for AKE, the current valuation could look extremely small. That's the dream scenario. And it's not impossible. But now let's flip the argument. The market has heard the blockchain gaming story many times. We've seen dozens of gaming tokens promise mass adoption. We've seen NFT ecosystems promise millions of players. We've seen play to earn models attract enormous attention. And we've also seen many of those projects lose momentum when the incentives disappeared. That creates the value trap argument. Maybe AKE isn't cheap because investors overlooked it. Maybe it's cheap because the market is skeptical that blockchain gaming can generate sustainable mainstream demand. That is a very different interpretation. A token can fall 90% and still be overvalued. It can fall 95% and still fall another 50%. The fact that an asset is far below its all-time high doesn't mean it has to return there. This is where retail traders often get trapped. They look at the historical chart and think, if AKE returns to its previous peak, the return would be enormous. But the previous peak was created under completely different market conditions. The project may have had different expectations. The gaming narrative may have been stronger. Liquidity may have been much higher. The circulating supply may have changed. And investors may have been willing to pay a completely different valuation. So the better question isn't, can AKE return to its old high? The better question is, what has to happen for the market to justify a much higher valuation today? And that brings us directly to the risks. The first risk is the gaming sector itself. A blockchain game can have great technology and still fail because people simply don't enjoy playing it. That sounds obvious, but it is one of the biggest challenges in Web3 gaming. Players want entertainment first. If the game feels like a token speculation platform with gameplay added afterward, mainstream adoption becomes extremely difficult. The second risk is competition. There are countless gaming projects competing for developers, players, liquidity, and attention. The third risk is token economics. If token supply expands faster than demand, price can remain under pressure even when the ecosystem grows. The fourth risk is volatility. Smaller gaming tokens can experience massive price swings. And the fifth risk is dependence on narrative. If the broader market stops caring about blockchain gaming, smaller gaming tokens can suffer even if the underlying project continues developing. Now let's look at the bull case. The best case scenario for AKE starts with AKEDO, proving that its games can attract and retain actual players. Not just token holders, not just speculators, actual gamers. If player numbers grow, community engagement increases, new content is released, digital assets gain utility, and the ecosystem develops a sustainable economy, the market could begin assigning AKE a completely different valuation. Then imagine the broader crypto market enters a strong altcoin cycle. Capital begins rotating into smaller gaming projects. Investors start searching for the next gaming token that hasn't already exploded. AKE could become an attractive speculative candidate. A breakout above major resistance combined with strong volume could then create a powerful momentum cycle. But the bear case is just as clear. The gaming ecosystem fails to attract enough players. Development slows. Community activity decreases, liquidity falls, the token continues making lower highs, and eventually traders stop treating every dip as an opportunity. That's when a falling asset can become a genuine value trap. The worst case scenario is not necessarily an instant collapse. It can happen gradually. The project continues existing, but user growth remains weak. The token continues trading, but volume becomes thinner. The community remains active, but attention moves elsewhere. And investors spend years waiting for a recovery that never arrives. So what should we watch next? In the short term, watch AKE's market structure. Can buyers establish higher lows? Can the token reclaim previous resistance? Does volume increase when price rises? Does the token hold gains instead of giving them back immediately? Those are much more important than one isolated green candle. In the medium term, watch the gaming ecosystem itself. Are actual players increasing? Are new games or features being released? Are users staying after the initial excitement? Is the community growing organically? Those questions can tell us much more about the future than price alone. And in the long term, AKE has one major challenge. It has to prove that blockchain technology makes AKEDO more valuable as a game rather than simply making it more complicated. If blockchain ownership, digital assets, and token utility genuinely improve the player experience, then AKEDO could have a meaningful long-term thesis. But if blockchain is mainly being used to justify the token, mainstream gamers may not care. That is the difference between a gaming project and a crypto project with a game attached to it, and it could determine the future of AKE. The bull case says AKE is still early in a massive gaming market with plenty of room for growth if adoption accelerates. The bear case says the token is competing in one of the most difficult sectors in crypto, where strong narratives have repeatedly failed to translate into mainstream gaming adoption. So, in the short term, AKE remains a high risk speculative recovery story. A technical breakout would improve the picture, a breakdown below major support would weaken it, but neither move alone proves the long term thesis. For the long term, investors need to watch the fundamentals: users, games, community, liquidity, token utility, and most importantly, whether people actually want to use the ecosystem without needing to be convinced by token incentives. Because if AKEDO can achieve that, today's valuation could eventually look very different. But if the ecosystem cannot attract sustainable users, the token may remain trapped in the same cycle of rallies, sell offs, and declining attention. And that's what makes AKE so interesting. It could be a severely undervalued gaming ecosystem waiting for the next Web3 gaming wave, or it could be another example of a token where the potential sounds much bigger than the current evidence. So here's the question that matters most. Will AKEDO prove that blockchain gaming can create a real entertainment ecosystem and turn AKE into a valuable part of that economy? Or will the market continue treating AKE as a speculative token with more promises than proven demand? The next major gaming cycle could completely change the picture. But before that happens, will buyers step in and reverse the falling trend? Or will AKE surprise investors with another leg lower? Remember, this is not financial advice. Always do your own research, understand the risks, and never invest money you cannot afford to lose.